Good morning, traders. It is Friday, August the 30th. It is the day before a extended holiday. Usually we do see an update in the equities market. We'll see how that plays out today. Overall, there's some downward looking pressure on the markets. It looks as though we could get a relatively quiet day, but overall, I think we're going to see some pretty strong selling, another big bout, likely next week for equities. Now, starting off here, here's the US dollar index. This is the daily chart, and you can see here we're down at a pretty key support zone, which are this previous pivot low area where we've had some spike low candles. We had price finally put in a bottom, have a really strong rebound. We've been talking about how price has been coming down here, forming possible rounding bottom formation. It looks as though to be forming that kind of a mini stage one basing pattern for this time frame. And if this plays out and breaks out today, which it looks actually fairly bullish when you drop down to any of the shorter time frame charts, whether it's a 60-minute or 10-minute, overall this pattern looks relatively bullish. It looks as though the dollar wants to pop, and it could easily run up to the 83 level. Now, as this has been trying to top out here, we've been seeing precious metals all hit resistance, and it's going to be interesting that if we do see this dollar rally, likely we're going to see precious metals continue to sell off, which they're starting to roll over here in the last couple days. I did post some charts showing how we were at resistance on the gold and silver and miners, and this US dollar here is playing out perfectly that if it does pop, we're going to see probably a quick sharp drop in the precious metals market, which could bleed out for a few days, possibly even a couple of weeks, as it has had a nice run. It's had its measured move. It's at resistance, so precious metals are likely going to run into a little bit of a resistance here and pull back. Now let's just take a look at the precious metal charts. We'll just start off here with gold. Here is gold. We're coming up to some key moving averages, a key downtrend line. We are into these previous highs over here, and we can see some selling pressure starting to kick in. Now, the simple measured move here, just visually looking, we've had a move up, consolidation, and about an equally leg higher as the first one here. So that's a pretty simple measured move. We're up at resistance. We did pierce this previous high here, I think, just by a couple bucks. Again, I've pointed out that precious metals do that more often than not. They will pierce previous highs and lows, and that's how they get all the shorts to cover, get everybody who's been watching it and itching to get in. They get long, and then you see the price reverse, and they'll be left holding the bag literally at the ultimate high. So that's just how precious metals market. That's how the equities market moves also, but precious metals is definitely a little more manipulated that way, and they really will try and get you to literally pay the worst price for something before they roll it over. Anyways, overall, if the US dollar continues to rally, I think we're going to see precious metals come down. We do have a couple levels here that we can find some support. We could see precious metals pull back here for a bit, find some support, build up a mini, more or less, cup and handle pattern. You could draw out a cup and handle pattern in here, and eventually that could have a nice explosive move to the upside. So that's what we're keeping our eye on, and expecting some short-term weakness here in the next week or so for precious metals. Now looking at the silver chart, pretty much the same thing. Silver's got a little stronger looking of a chart, but keep an eye on the volume here. It's been some pretty strong selling volume. We've come up, we have just pierced this previous high, this high volume resistance level. I pointed out silver and metal like to do that. Silver's even worse. Silver will run the previous highs or lows, shake the market up, and then reverse. So the key things to look here is simply we have had a pierce of this previous high. You can see we had a spike up through it, ran the shorts out of the market, got anybody long somewhere right up here, got a lot of people long, and now it's starting to pull back. Now we do have some elevated volume, some strong selling volume, which means price here is starting to churn. The bulls and bears are struggling. There's some distribution going on. And overall, we've had a pretty significant run to the upside, and we could see it bounce around here for a bit and form possibly a little mini head and shoulders pattern, and then eventually break down. We could see it come all the way back down to the 21, the 20 level fairly quickly. Silver has an interesting way of moving extremely sharply. Now, if we take a look at miners, here's the GDX daily chart. So this is the gold miners, but silver miners move pretty much the same. We had that pop up above resistance. It gapped higher, sold off, and since then it's been pulling back. Now we do have some support coming in somewhere down around this area over here, so there's still quite a bit of room for miners to pull back. They have had a sharp pullback, getting a little bit of bounce yesterday. It could chop around here for a bit, but overall I think it'll either work its way sideways or lower towards this support trend line, and from there we'll be looking for eventual breakout above this level over time. If this is a basing pattern forming, then we'll be looking to get long when price gets closer to the apex and or breaks out to the upside. Taking a look at the bond chart real quick, here's the daily chart of bonds. Short-term price action here looks relatively bullish. Looking at the price, we've had a strong run up. It's been more or less forming a little bit of a pennant formation or a little bull flag. Overall, the trend is down. It is still under resistance. I wouldn't be surprised. A lot of times when we see this form, you'll see a little mini flag, and then you could see a pop to new highs, very similar to what we saw in natural gas yesterday. It had a little formation, kind of ran the longs out with a dip, and then eventually got a pop and pushed to new highs. Usually that's followed by some pretty strong selling, and really that's just the market makers running the longs out and then running the shorts out and then continuing on with this downtrend. So they really try and throw everybody off the market, out of that investment before it continues to move. So that's kind of where we stand overall, still in a downtrend. We might see some short-term weakness, some short-term strength, a little pop in bonds if we get a big bout in selling here in the equities market, which I'll cover in just a minute. But overall, I think we're going to see bonds start to form more or less a basing pattern here, and eventually we're going to see it probably trade sideways for an extended period of time, or eventually work its way back up. But again, we'll let that play out over time and reanalyze as things unfold. Looking at the crude oil chart, this is the daily chart. We had that, let me just zoom in a bit. We had that pop above a resistance, excuse me, got sold off. Since then it's been pulling all the way back. If we were to just throw volume by price on here, and we'll just zoom into even more recent price range just so it's clear. Looking at this price action, we had that pop up, it has sold off, and right now it's coming right down into more or less the mid of this. This is going to be key support zone. As long as it can trade above here, it could hold support, and it could possibly take another run and try and breach this previous high, hit the 114 somewhere in here. Either way, it's still holding up, but again, we saw some pretty strong rejection here, and if it can't hold up, then we're going to see a breakdown, and once it starts to break down, we're going to have a support trend line through here, that once that level is breached, we'll see a wave of selling. Once this previous low is breached, we'll see another wave of selling, of stops being run, which will likely trigger a quick drop down to this next level. Once this level gets breached, that will trigger an even faster drop, and that'll bring us that'll more or less reverse this trend. Eventually we're going to look for a bear market, a bear pattern, and we'll play the downward move all the way down to the 92.90 level if things play out as planned. Overall, I'm not looking to get long up here. We got some serious resistance. We got some rejection going on. We got some more major resistance, even though there's about $7 potential there. Overall, I think it's playing with fire up at these lofty prices and showing that we have had some pretty strong rejection up here on the chart. Now, taking a look at natural gas, here's the daily chart of natural gas. We had a nice play in that. We pocketed overall, I think between the entire position should have pocketed between 4 and 5%, but overall, key things here, we are seeing price come up into resistance, starting to flirt around here. Pretty strong selling yesterday. We are into key resistance, which is this previous consolidation area, so it's going to be running into all this high volume area. We're seeing price more or less diminish. We're seeing a couple volume spikes of selling pick up. So with less buyers as price moves up into resistance and some selling spikes starting to increase, I gotta expect that we're probably going to see some type of crack and breakdown in natural gas going forward. Anyways, we're out of that play, going to let it reload, build us a pattern that's tradable, and then we'll look to get involved in natural gas again when the time comes around. Now, taking a look at the SP 500, Here is the SP 500 chart. This is our signal chart. This is a 30-minute chart showing our oversold, overbought, and market conditions in our colored coded trend candles. Overall, the pattern here is bearish. We had a strong crack to the downside, started to form a bear flag, then became overbought up in this area, which we took a short position. Then we saw the market crack and break to the downside, having this move down. Right now it's forming a bear flag, and it could ping pong around and could continue to actually move up. It is a pre-holiday weekend or day today. It's Friday. Light volume typically favors higher prices, but overall this pattern is bearish, and likely I got a feeling we're going to see another strong bout of selling next week. Now, one thing to take a look at here is the volume spikes. We've had a couple strong volume spikes that have really cracked the trend to the downside, confirming that there's fear. First one was more or less a shock, the way fear disappeared throughout the trading session, and then we had this second big crack to the downside and fear started to ramp up and increase. So this is telling us that there's fear still building and there's more of it. If we zoom back on the chart here and look at the last time we had a trend reversal, take a look at the volume spikes that we had over here on the last major break to the downside. You can see we're really just scratching the surface of trend reversal levels on our two recent volume spikes. And then what's going to happen is if we do see a huge drop to the downside, which remember the biggest move happens usually just before the trend reverses. This is when you get the biggest move and then the trend actually reverses. So we're kind of looking for a sharp move down, multi-day extreme sell-off, high volume. Everybody get panicked and freak out, and we'll see a huge volume surge of sellers where there really are no buyers. It's just pure selling volume all session. And once we get that, that's when you usually start to get a significant low put in place. So even though some of our market internals are starting to bottom, you got to remember some of the biggest moves are going to happen just at the very end, these spike lows, before the market reverses and potentially works its way higher. Now taking a look at I'm just going to pull up the VIX really quick here. The VIX has got an interesting chart. Overall, it's looking fairly bullish, which means lower prices in the equities market. We've had a move up, pull back, another move up, pull back, another move up. It's been trading sideways here, and it looks as though the fact that it pulled back yesterday and squeezed and rallied back up, it looks as though we could have one big pop any day soon here. A big pop in price means the equities market is going to take it on the chin and have a sharp correction, have that big selling. So that's kind of where the VIX is kind of giving us some insight, I think, into overall what the equities market is doing. And then if that plays out, then we'll have a potential head and shoulders on the VIX, which means with price see this eventually come back down and then trade down this low volatility level for a while as the equity market recovers for a 4 to 12 week period, which is a typical cycle, a couple of cycles that it'll naturally go, and we'll play it by ear for there. Now taking a look at the intraday chart of the SP 500, here is the 10-minute chart of the futures this morning, and we're zoomed back 1, 2, 3, 4, 5, 6, 7 trading sessions. Overall, looking at this pattern, huge move to the downside. Selling volume more or less ramping up as prices started to top out and really having a strong sell-off. Now we're forming this more or less broken arm, this bear flag pattern. It's been chopping around, which I pointed out yesterday in pre-market that we'll probably see some pretty strong chop. And we actually saw a pretty strong dip pre-market yesterday just after the video, and then a strong rally again. And then yesterday afternoon, it pulled right back to be almost relatively flat on the session from where it started. Overall, it's been chopping around again in overnight trading. We've seen it go back up to yesterday's highs. That probably pierced it by a tick or two just to run any futures orders out. It's come right back down to that level. Now it's bouncing around. Overall, this pattern looks as though at any time it could break down and crack to the downside, and we see another major landslide, which is what we're looking for and what we're positioned for. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.